Good day and welcome to week 6 of the Soy Market Watch, sponsored by the Iowa Soybean Association. I'm joined with Bob Linneman today, and we have a lot to talk about in the next few minutes, so I'm going to jump right into it. The standard risk disclosure statement is there. We have many people watching this each week, but we need to do this. I just need to point out the red lines that my job is to tell you that you can lose money trading futures and options. There's risk in trading. Then the last sentence in the last paragraph, the opinions expressed herein are the opinions of the author only, and not the opinion of any firm the author might be affiliated or associated with. Bob and I are both Series 3 commodity brokers, Wedbush, and this information is put together by the Kleiss team. It's more than just Al Kleiss putting this information together. Also should be noted that the information that we're providing here today is the thoughts of the Kleiss team and does not represent the opinions of the Iowa Soybean Association. So we're going to look first at what happened last week, kind of set the table for what we expect to happen in the coming weeks. We're going to look at prices from last year. Bob and I both enjoy working with charts, and then also I think it's been very popular that we set out some very specific price and time objectives. Last week we had pretty ideal weather across the Corn Belt. Rapid planting. Very few customers that I know that are 95 to 100% done with planting corn, unless, Bobby, you have a corn planter breakdown, right?
Yeah, that's right. Yep.
I think this week USDA will show 82% of the crop planted for corn, 65% complete on soybeans. So the crop is viewed as being off to a really good start. And that's true in about 70 or 80% of the Corn Belt. We continue to see rain, a lot of storms, tragic storms moving through Kentucky last week. Soybeans closed a fraction lower, but well off the early week low. We're just kind of moving sideways in here. It's been amazing. We've had a lot of days with just a 10-cent range. Soybeans closed a fraction lower, but one thing Bob and I watch all the time is that the bull spreads really started to kick in. And as we're recording this again today, the bull spreads are working quite well. Farmers haven't been selling, but funds have. Funds sold 99,000 contracts last week, and we're now, with today's action, expected to be short 100,000 contracts or more. You combine short corn and wheat, it's one of the largest short positions that we've seen. Cash basis levels continue to improve. The one problem we had last week was in the soybean oil market. News sources indicate that early indications from the EPA administrator calls for about 1 billion gallons less biofuel next year, and that locked soybean oil limit down, and that took soybeans down. A week ago today, Monday, Tuesday, we had a lot of optimism in the soybean industry, but the possible change from EPA kind of really pulled the rug under the soybean rally. This is the U.S. dollar index, and this continues to trend lower. Bob, we have a lot of resistance right up about 102. Isn't that where you have your 20 and 50-day moving averages cross?
Yeah, that's actually where we stopped last week. Al was right at that 50-day moving average and backed off Monday, Tuesday, and then just kind of traded sideways, like you said. And then now this morning, the low or low overnight that today has been the 20-day moving average. So on the chart, you saw the 20-day was resistance for a while last week, where 2 weeks ago we were able to get above it. Hit the 50-day, backed off of that. Now we're looking at that 20-day possibly being support, depending on what the news comes out as.
Yeah, the dollar has been trending lower, and if you look at this chart, what I see is a pattern of lower highs and lower lows. And if you take out 97, you'll go all the way down to 94. We've really seen very excellent corn and soybean exports over the last few weeks. When you look at the current transportation costs, you look at the current Chicago Board of Trade futures price and the dollar index, we have some of the cheapest grains in the world. Soybeans, 12 pounds of bean oil in a bushel of beans. And so we had a really nice rally early next week. We had this get up to 51.70. It's always encouraging to me as a chartist, somebody who watches trends. We were able to trade above the 2024 highs. We weren't able to hold that, but we've got really good support in here. One of the things we're optimistic on is possibly a trade deal be announced with India this week, and India could be a huge veg oil, soybean oil market for the U.S. So far, so good. We're holding where we need to on both the soybean and soybean oil chart. So last week we had the May to July corn go off, and so because of the continuation change, we had a 2 cent gain in the corn chart. And so 443, this 451 level is going to be tough resistance, and we're now a little bit lower than last year. Soybeans, 6 cent gain. Most of this was the May to July continuation chart. To really turn the trend, you've got to get the markets up and close later this week, about 451 on July corn, 1075 on July beans. And to be honest, I don't see that news developing. US dollar was higher last week. We've lost all of that gain so far today, but we're still a lot lower than last year. What do you watch this week? We have a very good ag secretary, and I think she'll be able to convince Trump to lock in a higher level of biofuel production next year. Trump has been doing what he can for the soybean farmers and for the soybean industry. Will the ideal weather pattern continue for the Corn Belt? It looks good, but again, now 20 or 30% of the area is starting to struggle. Good to excellent rating on corn today, I think, will be at 60% plus, and this will be the first crop condition rating we get for corn. And I think soybeans will start next week. Watch the corn planting progress numbers for the southern corn and Delta. Talked to a few customers, and I was surprised. I do think we're going to see additional prevent plant acres in that area. Very frustrated. They want to grow a crop, but they just can't get it in. Chart analysis. Bob, what do you think of this corn chart?
Yeah, we definitely need to hold some support here, Al. It's one of those things, the continuation chart, when the May went off and July became the front month, it is one of those key summer months that can get real wild on us. We just need the breakout to be in the right direction.
Yep. 430 support, 451 would turn the trend up. I'm not overly bullish, but I think we could go up and test the top end of this trading channel. Soybeans, what's this chart telling you, Bob?
Yeah, if we could have avoided the news last week, Al, this chart was looking amazing, and that's what happens when we get one of those kind of headlines that just doesn't kind of jive with what the trade was looking for. So now we hit the pause button on the fun money flowing, and now we just need to see what happens with the headlines, and if they reverse that and go back to their number from a couple months ago from the EPA, do we get right back to this level of resistance? And that would be the big question.
And if you can get above 1080, that's been kind of like now a triple top. I think you could have a run very quickly to about 1140 to 1150. And certainly, if we get up in there, you've got cash beans left to sell. Boy, that would be a great opportunity. You can be aware that your bids out into August, September are at a substantial decline to where your June bids are for both corn and soybeans. So if we get weather-driven rallies, some news out of Washington that rallies prices, don't just watch it, have a plan in place. So I'm looking at 449 to 485 is going to be a tough levels to get through. These are logical places where if you need to make sales, Key levels support at 440 and 430. Low today on Monday was 443. Soybeans, a high 1068 to 1098. I'd love to get it back up close to $11 to make some sales. You have key moving averages and the 2-week low down at 1036. That's a level that needs to hold on a closing basis. With these algorithm traders and fund traders pushing volume the way they are, you can spike below there. But Bob, I just don't want to see any close below there.
No.
Key days to watch, May 23rd is coming right up. So often we see change in trends around Memorial Day and then out to around June 30. For soybeans, it's not always this way, but this time as I update all of my hand-drawn charts, these are a couple of really, really important weeks that I'm watching. And this is true every year, but it's especially a lot of numbers, a lot of cycles coming together for that 2-day period. Just a reminder, the next reporting will be on Tuesday, May 27th. We enjoy working with the Iowa Soybean Association, and so we're going to give them the weekend off. They have that extra day off. Same with you, Bob. You've been a good employee with me for
I
10 years, so
I
you can
appreciate
take
that, Al.
Monday off.
Yeah, thank you.
Please call with questions. We encourage that. A few people have. I'd sure like to have some more call us in. 888-345-2855. If you would prefer, you can email directly Alan Kleiss, alan.kleiss@wedbush.com. And a special thanks again to the Iowa Soybean Association. We were getting a lot of people viewing these recordings, but we would sure like to have some input back from you. So this has been presented for the Iowa Soybean Association by Al Kleiss and Bob Linneman, and that we will begin again. May 27th will be the next update. Have a great holiday weekend.